I bring in Francis Tan, now investment strategist at UOB Private Bank, for more on the latest developments. Francis, let's talk about the yuan intervention, possibly one of the strongest currency guidances ever. Bloomberg calling it the most forceful fixing. What do you read of it, and how far could this go in restoring confidence?
I think that it goes quite a big way to restore confidence. First of all, this is the largest we have ever seen so far in terms of fixing. And just before coming here, I was looking at the technical charts, and it seems like the market is biting and believing about this support that the PBOC is giving to the renminbi. Because we have been seeing the renminbi depreciating for quite a couple of months already against the greenback, and I think they think that the PBOC probably think that's it's a bit too overdone, and they really need to show some support. To me, I think this marks the start. It's not the end. It marks the start of a series of support that is presumably coming from the Chinese policymakers.
We know that they've been talking about, providing more support for the longest time, but we haven't actually seen anything that's concrete enough or significant or big enough. So first of all, my question is, how sustainable is the latest move by the PBOC? You said it's already biting, but the question is whether it can sustain.
Well, I would say that Chinese policymakers have a series of tools in their toolbox. And for the PBOC's renminbi fixing, it's only one of the two to at least slow or to signal to the market not to go against where they want it to be. Because currently, the renminbi has been depreciating for quite a long time. Now, to utilize the other tools for the whole economy, there are plenty others as well. I mean, recently we have seen the cut in the LPR, the loan prime rate. We have seen the cut in the MLF. I think these are some signals, although market has been constantly saying that there's too little in drip feed, right? So I guess there will be a couple more to come. They can increase the cuts in the LPR. That's for sure. There's possibility. And a lot more room to go, especially to provide the assurance of liquidity to property developers.
Yeah, especially that's something that we are also looking at today, because China Evergrande filing for that Chapter 15 bankruptcy protection in the US. Let's talk about the risk of a contagion. Could we also see other developers go down? Country Garden is one that we've been watching very closely this week. Could it go the same way?
Well, bankruptcy is one thing, but if we look at it from the fixed income side, I mean, if you look at the entire Chinese property developers' fixed income, the bonds, already 60% has defaulted. So I would say that if you are thinking about the contagion amongst within the industry, the property, the real estate industry, it is already being there. 60% to me is quite contagious already. However, I think what's on the back of everyone's mind is that whether this contagion will be spread over to the entire economy. I would say that not so, because in fact the economy right now is suffering a lot more from the lack of export demand from the rest of the world, more than the property sector. Although, of course, property sector is linked to, I would say, everyone's wealth. And if a prolonged decline in the asset value of property, that will also impact in terms of the sentiments of the people.
It is a key pillar of the economy.
Exactly.
Also, of course, could the economy then also be in for a root shock, or have markets already priced this in? The concern is whether we could see the 2015-2016 turmoil replay, this year.
Well, by 2015, 2016, I think you are talking about the equity sector.
Yes.
Yeah, the equity markets. I will say that there's always this possibility for a replay of that. But then if we were to look back into the 2015-16 saga, that steep bearish market prompted the government, prompted the policymakers to come in with a much stronger push or support. So I don't think the Chinese government or policymakers want to see that happening. But if that really happens, I think it's going to be quite a sharp V-shaped recovery.
But also, we talk about the bearish sentiment. The Hang Seng is is edging to a bear market. How big a concern is that for you?
Well, I guess currently in terms of the sentiments with regards to asset classes, asset prices, property prices, fixed income, or even equities is poor. So what the Hang Seng is moving towards the bearish territory, is nothing that we have not seen before. I mean, it has happened over the last 2 years. It continues to show that the sentiments are still weak. But we are not coming from a high point into the bear territory. Right now, we have been seeing that the entire market has been weak anyway. So I would say that everything still relies on two things. Number one, the strength of the Chinese consumer. Number two, the efficacy of the potential policy support that's going to come. And in my own read of the high-frequency indicators, the Chinese consumer is still pretty strong. right now. We are looking at box office revenues, queues at the restaurants, tourist spots. Things are coming up very strongly. So the consumer have the ability to support the entire consumption, which is a big part of the GDP. The only thing right now is sentiment. So policy has got to come in to provide both the willingness and the ability to support the overall the GDP.
Yeah, and hopefully see if that can help to reverse negative sentiment there. Francis, appreciate you coming in to talk more about this with us. Francis Tan there, investment strategist at UOB.